Gold versus dollar versus crypto. Which is the real asset class? Want to find out? Hi, this is Toshi, your host, and welcome to another episode of Money Matters. I have with me today Mr. Amit Jain, who's the co-founder and CEO at Ashika Wealth Advisors. Welcome, Amit, to India.com.
Yeah, thanks, Toshi. Thank you so much.
Okay, Amit. So, my first question to you would be that, we've been hearing about cryptocurrency. It's literally, the talk of the town, if I can say. So, what are your inputs on that?
So, I believe if you said rightly in the topic that cryptocurrencies versus dollar versus gold. So, I'll give you my view. My view is the real asset as of now, as on today, is dollar and the gold. For me, the cryptocurrency is very, very speculative asset class. And this is a very unique asset class or a typical asset class, which can go up by 20% on a single tweet of Elon Musk, right? And it can go down by 50% within 3 days without any reasons. So
Absolutely.
This is a very speculative asset class. If you go back to the history of Bitcoin, I think it started with almost less than $1 in 2010. And today it is close to $43,000, right? So any growth at this pace come with a lot of risk. So for me, the real asset class comes with the dollar and the gold. Anyone who want to be adventurous with his portfolio, or he want to take just taste of it, he want to a bumpy ride, he can of course invest into cryptocurrencies. For us, when we advise to our clients, it is only a computer program.
So, Amit, as we all know that, the current value of cryptocurrency is around $2 trillion US. So, is it really worth it?
Yeah, you're right. So, the cryptocurrency is close to $2 trillion as of now. I believe this asset class has emerged because of excessive money printing by global central banks. As of now, if you go in last 2 years, the global central banks has printed almost $9 trillion. And this liquidity will find its own way. Some investor will invest into a stable asset class, say like gold. Some will invest into real estate. Some will invest into stock market where they can see the fundamental of the companies and they can predict the future of those companies because they have a underlying P&L balance sheet. Then there is a unique investor class, which is very speculative in nature. And these speculative investors trade something like into Bitcoins. So this asset class has become big over the last 10 years. But I think the risk-reward ratio at this level looks a little unfavorable for the asset class.
So I was saying, that as of now in India, cryptocurrency is not very legal. So how is the trade happening?
Yeah, recently the regulator has come out with a paper where they want to make it, they want to take a first step to make it legalized. But I think it will come with a lot of risk and it will take a lot of time from an India perspective. Also, I think it is one of the favorite asset class for millennials. Anyone who is born after 2000 because they want to speculate, they want to try out with small amount and feel it. So far as it is only as a hobby, it is good. You want to invest 1% of your portfolio into say Bitcoins, good enough. But you cannot take exposure the way you take exposure into gold, the way you take exposure into housing market, housing investment, the way you take investment into your stocks and mutual funds. So that way, this asset class will emerge for sure, because now government has shown some intention to make it a regular asset class, but it will come out, it will only unfold with the time.
Right. So as you mentioned that, in India, currently the scene it's not completely legalized, although the government is taking certain measures, and as you also pointed out that, this is especially for the millennials, because they always want to give their hands to something which is, in talk of the town, especially. So, as you mentioned, gold as a reliable source of investment asset class. So what could be the future of gold investment, and has it changed over the period of COVID-19?
So gold is a world reserve currency for last 2000 years, if I can say so. So it has a historical background for last 2000 years since the time this monetary system has come into play in any of the empires, any of the centuries, right? So it has its own value and it will continue to be the same, right? So gold, we are very bullish. And we are advising all our clients to move their debt mutual fund portfolio or fixed deposit portfolio to gold, keeping next 10 year in mind. Because if you go back to the history for last 10 years, the debt mutual fund has outperformed gold as an investment. But this is past. If we talk about future, because you have to invest now, right? So if we talk of next 10 years, then we are sure that the gold will outperform any debt mutual fund performance, keeping next 10 years in mind. So we are very bullish on gold, and I think the $3,000 an ounce price will be there in gold somewhere around 2030.
Right. So, gold is always a safer option when it comes to investment,
Yes.
and especially. So, during the initial start of a conversation, you mentioned about the US dollar also. So, what are your views on the US dollar and its impact on the global economy and the Indian corporates, especially?
So US dollar is the world reserve currency as on today. Uh, I think it is a reserve currency from 1944, since we had a Bretton Woods agreement in the global economies. And I think this currency is losing its sheen from last 10 years after the global financial crisis happened in US. So I think if you take a very long view from us on the US economy in US dollar, then we are neutral to negative on the US economy as well as on US dollar, because we believe that excessive money printing by US Fed will put credential of US dollar in question some point of time. In last 1.5 years, they have printed $4 trillion without any checks and balances, right? And which is inflating the all asset class in the world, be it a stock market, be it housing market in US, or be it any other asset class. It is inflating all the markets, right? So it's an economics principle. If you have unlimited supply of anything, it will lose its value in the long run. And this is what we believe will happen with the US dollar in next 15 to 20 years time. Given their scenario today, if I need to invest in US or China or India, I think we'll prefer the latter, because we believe the growth lies only in these two countries. And Asia is going to lead the world after 2050.
Right. So that's a very big statement that, Asia is going to lead the world. And also, as you mentioned, that, dollar is losing its charm, its sheen. And what do you think that, US dollar as the reserve for the, almost all the countries, we can say it's the reserve currency. So what would be the status of it?
I think I'll give you a fact. Today, US government has a debt of $155 trillion, which is an unfunded liability, including their retirement bills, their medical bills, and everything, and social security. And $155 trillion is huge, which is almost 700% of US GDP. So you forget about US. Think of a corporate house who is leveraged 7 times of its top line. What will happen to that corporate? What will happen to that stock? It will find I think it will be very difficult for the corporate to sustain. But yes, US has that military power where they can command the world. They can force world to accept dollar as a reserve currency. But I think with the emerging powers like China and a good tie between China and Russia, this power will be challenged some point of time in this ongoing decade of 2030. So I think, in my view, is there are chances that US dollar may lose its value of a reserve currency going forward, because number one, they are printing excessive money, and number two, now post Afghanistan debacle, I think they are losing their power on the world economies. Right, so somewhere you will find that Asian economies and Russia will become more powerful, and they will command. They will start taking more shots on the global side. So because of these two reasons, you will find that US dollar may come down, or US dollar index may come down.
Right, Amit. So as you pointed out that oversupply, because US is being printing excessively, and excessive supply of anything is in the long run it's not favorable. And also, as you mentioned, that certain things with Afghanistan and certain international relations are also affected. So that might also have an impact on dollar being as the reserve currency. So my most, because we've discussed crypto, we've discussed the US dollar, we've discussed gold. So which asset you'd rather hold on for the next 10 years, crypto, debt, equity, or other international funds or gold?
So I would say that we are bullish on equities because till the time US keep printing money, you will find equities will keep going into a different level altogether, right? And the beauty about equities is that they have a low transaction cost. So if I want to buy a stock, it costs me only 25 paisa. But if I want to buy a house, it costs me almost 8 to 9% of the property cost because I have to register that property. Right. So we have to see that in the era of free money, which is created by US Fed in last 12 years, right? The all asset class will go up, but comparatively, the equities will outperform any other asset class in the long run, keeping next 10 years in mind. After equities, we are bullish on gold and real estate investments. Debt, we are not advising to our investors because debt rate of interest or the bonds rate of interest or fixed deposit rate of interest either will become neutral, will stay where they are today, or they will be declining further. Because rate of interest will not go up because the world economies cannot sustain higher rate of interest. I'll give you an example. In 1981, the US Fed was having a rate of interest close to 14%. Today it is half a percent.
Then, and almost half now. That completely explains.
And yeah, correct. So that's why we say, in fact, we made that statement in the media recently that the bull run in global bond market is coming to an end. Because once you are at the rock bottom of rate of interest of cycle, then I think the bond price will not go up further. And if the rate of interest start going up, then the bond price will come down. That very long bull market will start in 1981 for the bonds or the fixed income maturity plans is coming to an end because we are at the rock bottom of it. And today, none of the businesses can sustain higher rate of interest. If you go to Nifty companies today, the profit margin, which was close to be around 20% in 2004, the profit margin is close to only 7 to 8%. How they can sustain a higher rate of interest? They cannot. Right? So the world economies cannot take higher rate of interest. So you will find in the long run, the rate of interest either will remain low or maybe up by only 0.5 to 0.75% only. Hence, we are advising all investors to move their money from debt instrument like bonds and fixed deposit to gold so that they can get a better return on their investment. Because these all three investments, whether it's bond or it's fixed deposit or gold, is meant for conservative investors. These investors never invest into equities. So keeping their taste, their preference in mind, we are advising them to do a shift within a conservative asset class. That is from bond to gold.
Okay, so Amit, do you want to add on something, or I think we've almost covered everything. We've spoken about it, right?
I think yeah, we can cover that. We are the perpetual bull on Indian economy because I think we believe that India has a TINA factor, and the TINA factor is there is no alternative to India because this is the only country which give you two benefits. It gives you democracy of US, it gives you demographic dividend of China, and probably the youngest population we have. Right. Only thing is we need to channelize our energy rightly so that we can make this engine run. So Indian economy don't have any substitute for the world because today if I'm a global fund manager and I want to invest, I have 4 or 5 choices. I will invest into US, I'll go to Europe, I'll go to Gulf, and no other country can give me that scale. Or India, of course, India and China. Then of course the fund manager choice will be India because that is a democratic country where transparency is there. Right. And this is the country which can actually replace China in next 10 to 15 years time. Right. So we are perpetual bull on Indian economy, and among all the stock market, will favor Indian stock market for investments. So that was the answer to your last question.
So, yeah, India is the go-to market, with we having the democracy in place, and also, the population, the younger population we have, and the investment scenario in the country is also very favorable, especially for foreign investors also to come in and invest in the country, as well as for the domestic investors. So that was so great to have you, Mr. Amit Jain, for this episode of Money Matters, and we'll see you again for the next episode of Money Matters. Until then, keep watching India.com.